folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Hey, what's up? What's up, traders? Welcome back to the Trading Nut live stream. I'm here today. My name is Rodrigo. I am your host for today. And today I'm going to be covering the charts. I'm going to be talking mindset. And unfortunately, we're only limited to about 60 minutes, 45 to 60 minutes. So we're going to make it snappy. We're going to make it impactful. I'm going to show loads of value for you guys. I'm also live on Instagram. So any of you who are watching on Instagram, what's up? And bear with me, I can't see your comments. But if you want to see my screen, then head over to the Trading Nut YouTube channel. Make sure that you subscribe and obviously smash that like button, guys. So I just want to let the room fill up a little bit. What's up, Sean? How you doing? So type a 1 in the chat if you guys can hear me, okay? And see me. Just have a sip of my espresso. Any Star Wars fans out there? Yeah. Yeah, it's a bank holiday. That's right. So you're probably based in the UK, right? Yeah, thanks, guys. Yeah, thanks, Panda. Let's get it. Patrick, I'm not allowed to trade live, but I will be taking some paper trades if I see a signal. So stick around if you wanna. I'm gonna be trading indices. So I'm gonna be trading either the Dow, the US 500, so the S&P 500, or I'm going to be trading NASDAQ. Yeah, we'll just see we'll see what there is. I'm going to do a completely fresh analysis. And fantastic. So Sean, happy birthday. Yes. May the 4th be with you as well when it comes to it. Unfortunately, today is just May the 1st, but it's not unfortunate. It's your birthday. So happy birthday, Sean. Hope you're having a good one. Well, thanks for tuning in on your birthday. Really appreciate that. Okay. Looks like the room's filling up well. Let me start setting up my chart. And whilst I'm doing that, smash that like button and make sure you subscribe. Okay. So let's go ahead and share my screen. Let me just double check if my Instagram's still going. Yes. Fantastic. Lovely. Okay. Live on Instagram, live on Twitter, live on Facebook, live on YouTube. Takes balls to do this, guys. You know that. But whilst I get this chart set up, I'm gonna just run you through. Okay, so let me. Okay. So before we begin, there is a process. There's a specific process that you need to follow before getting into the charts. Okay. So that process is your pre-market. Okay. Now, depending on where you are in the world, you need to adjust and adapt. So the best times to trade from a performance standpoint is during the first 8 hours of your waking day. So wherever you are in the world, that is the best form of trading, right? That's the best time to trade because you're rested and you have more energy, you have more higher mental capital. Okay, so the morning routine or your pre-market process essentially needs to be very specific and process orientated. You need to have a pre-market routine during your morning routine that's going to get you into the zone. So if you are in the UK, Greenwich Mean Time, around Europe, then I would recommend trading the London Open, right? Because that way you have the morning to be able to prepare for it. Now, if you are in the UAE, for example, you're a few hours ahead, even better, you have an advantage to trade London because you guys are about 4 hours ahead. In the US, this is going to be very difficult. So in the US, you're better off trading the New York session. So this way it gives you time to prepare. And what can you do to prepare in the morning? You can exercise is very good. Cold showers, meditation, stretching, journaling, practicing gratitude, affirmations. You know, the list goes on, right? There's plenty of things you can do in the mornings before your pre-market session. And this is very important to prime yourself. You need to be absolutely primed and ready for the charts. The worst thing you can do is wake up, jump on your phone, start checking charts, start taking trades. Big mistake. Okay. You need some preparation. Okay. So this morning, you know, I've already done my exercise. I'm caffeinated. I am fasted as well. So all of these things they contribute to me being at my high performance state. And I've gone through my principles. I understand, and I'm in flow right now with my code, with my process. So this is really important, guys. I cannot stress it. I can't stress it how important this is, because if you're not primed, if you're not planning, then you're planning to fail. Okay, that's the reality of things. So let's have a look at the charts now. Okay, so I wanted to give you that quick tip when it comes to process. So we got traders tuning in from different places around the world. That's fantastic. All the way from Nepal, Akash, fantastic. All right, so let's see what we got here. Let's bring up the screen. Okay, perhaps I need to zoom in a bit so you guys can see prices a little bit better. I should be okay, right, guys? Let me know if it's not too clear. Let me check the settings. Yeah, we should have 1080p full HD, guys. So okay, let's have a look. Where are we on the DXY? So I'll begin with looking at the dollar. I tend to use the dollar in order to I tend to use the dollar for direction. And looks like a sell model here on the dollar. We've got these relatively equal lows, and price has been consolidating since, pretty much since Friday. It's been sort of bouncing around 102.80 and 100 spot 80. So that sort of range right here. So let's go down into just on the weekly. We have this this particular rejection block that I'm quite interested in, and I have refined it on the lower time frame. We have taken out this sell side liquidity, and so I'm rather bearish here. I'm swinging more bearish on the DXY at the moment, and it's very interesting how we have this particular last down candle before an up move. So we have this order block here, and price has reacted twice in it. But I've also got mapped out this this rejection block over here. So I'm quite interested to see how, if price reaches this point, then I'll be quite interested to see if there is a potential for longs here. But for now, because we're not quite there yet, and the fact that we are on a bank holiday here in the UK, we're not seeing too much volatility so far on DXY. We're still sort of consolidating. Now this is great for day trading, guys. So if you're a day trader like myself, then this is a great opportunity to be playing the range. So whenever I see sideways markets, I know, right, I'm looking for Asia purges, I'm looking for turtle soups, I'm looking for boomerangs. Boomerang for those who are trading the bank level trading strategy, turtle soups, Judah swings for those trading ICT. These are the type of setups that work really well under these current conditions. Okay. So what I'm seeing so far on the XY is in prices just compressing and creating liquidity, both to the buy side liquidity and sell side liquidity. I'm seeing this internal liquidity as an opportunity for a purge before a potential move lower. So we could see a play where these relatively equal highs internal liquidity are going to be taken out, perhaps today. Otherwise, just as a reminder, it's very important that you guys check out the economic calendar for this week. This week is jam-packed, full of data, high impact data. So huge amounts of volatility this week. So there's a lot of opportunity, and of course also a lot of risk. There is the risk of a lot of slippage. So please do understand the risks trading in weeks like this. And unless you have a model that's been fully back tested and proven to trade under the current conditions that we're in, trading during CPI data or holding trades during CPI data, if you don't have this, if you don't have your model back tested during these periods of volatility and high impact news, you should just be reading the tape, watching and learning, attending these talks to live streams, taking note, trading on a demo. You should not be trading live, and you should not be taking on challenges if you don't have the experience and the data. Okay, you need to understand this. You need to accept, fully accept the risk and the consequences when trading during these high impact, high volatility market conditions. So now that we have marked out internal liquidity, there is a bit more internal liquidity here. Now I would say this is more, this is more of an external liquidity. If we go down to H4, yeah, we can see here that price has just been trickling, going up and down. It's quite choppy. Let's go down to the M15. What are we seeing? M15 yeah, volatility has yeah, we're seeing volume starting to come in, or volatility starting to come in. Is there any news that we should know about? Okay, interesting. Okay, so we're seeing a lot of inducement earlier on today on the 15-minute before. So shorts were being induced, and then longs came in, and now we're looking to take out this buy side liquidity. Looks like we're targeting to go a little bit higher. It'll be interesting to see how this plays out. So if we have a look at roughly, okay, very nice. Quite difficult market conditions, to be fair. But I can see that liquidity is building up. A lot of liquidity is building up. We've got these relatively equal highs up here. So I am favoring, on the short term, I am favoring longs up above these relatively equal highs. So stacked with that information now, we could be seeing a potential shorts on indices. So let's start moving over to indices to start seeing if there are any potential shorts on a short-term time frame. So perhaps we might get a small pullback here in order to look for longs. Now, just want to have a quick interlude and discussion now that you guys we started off discussing what you should be doing pre-market, right? So pre-market is a part of the process which I refer to as recalibration. Recalibration is you're getting into sync with your physical and with your mental and with your spiritual. You're getting into sync with yourself and the market. Okay, that's pre-market. The next stage once pre-market is done is the trade execution, trade management. At this stage, you should already be primed. You should already be focused. You should already be awake, and you shouldn't be thinking about what happened in yesterday's session, your P&L or anything like that. You should be focused on executing your model, making sure that every single confirmation signal is being ticked off. So at the moment, so far, I've looked at DXY, and now I'm starting to, I'm looking for that correlational analysis. I'm just seeing where inducement is, where the liquidity is, so that then I can zoom into now and go into indices to see what kind of divergences am I seeing in price action. Where is the liquidity? So we're going to do a top-down analysis on indices, and it's important to understand that we're still now recalibrating. We're still getting in. We're still preparing. We're still during pre-market, okay? And so I'm just giving you an understanding of how important process is, because during this pre-market, during this preparation time, you're in a different mode of thinking. You're not in fast thinking. You're not executing trade, you're analyzing. And there's two main roles as a trader. You're an analyst and the trader himself. The analyst is the engineer, the scientist. Okay, this is the analyst who is conducting the analysis, is being creative, is ensuring that the boxes and everything like that, all the trading plan is being planned, is being executed properly, the analysis is in line, and the engineer is engineering and analyzing the setup itself. Then once the analyst is done with his job, then you become the trader. The trader has two parts. One is the risk manager, and two, the psychologist. So as the trader, you need to switch away from the analyst and you need to now go into trader mode. Now, trader mode is automatic, fast thinking. Yeah. And there's no time to think. There's just It's just execution. There's no hesitation. It's fearlessness. It's being present. It's not thinking about P&L, right? It's thinking about, right, is this, now that this trade is in line with my, is this trade in line with my trading strategy, with my model, or is it not? If it's not, I step away. That's the risk manager says, there's no trades, no risk. No trade, no risk. Because not being in a trade, write this down, guys. Someone type it in the chat for me, please. Not being in a trade is a trade. I'll repeat that. Not being in a trade is a trade, because number one, the rule number one in trading is capital preservation. Write that down, guys. Someone in the chat who's paying attention. Not being in a trade is a trade. Rule number one is capital preservation. Now, once the risk manager is has decided that there is a trade and there is risk, an X amount of risk is going to be put for that trade, then you go into the psychologist mode. You need to check in with yourself. You need to be calm, composed, and focused, laser focus. You need to become the sniper, okay? Because you got that one shot and you need to make sure that it's in line with your process, and that is the model that you're trading. You got one bullet in the chamber, and if you miss, or if you get it wrong, then, or if it's invalidated, that's it. It's fine. You walk away, look for another setup. Okay. So I hope I see Patrick's paying attention. Well done, Patrick. At least someone's paying attention. Good, good, good. All right, so let's move on to indices now. Okay, let me change the chart. Let me show you guys what I'm seeing. Here we go. All right. You can see we've got old analysis. Oh, what a beautiful move last week. Beautiful move. Just a quick check on the DAX. Quick check on the euro. Okay, interesting. Okay, let's go back to our indices. So, right, let's have a look. So last week we managed to close right bang on the previous week's high, but we didn't quite take out these highs, did we? It's interesting. Okay. So let's see where we are. Okay, we're still within this fair value gap. And it's interesting to see how price has continued to close above the consequent encroachment of this weekly fair value gap. Let's have a look on the daily. Daily we have, okay, let's have a look at this order block. Okay, it looks quite bullish. It's looking quite bullish. Let's have a look at this order block up here. Quite far away from it. So with DXY looking like it wants to go higher, and the S&P 500 from a higher time frame perspective also looks to go higher, that's indicating to me that a little bit of an opportunity here, right? So if DXY pulls higher, as I'm anticipating for today or at some point this week, and indices pull lower, then that will be an opportunity to then target this higher time frame order block and target this buy side liquidity. Okay, I really like the way the sell side liquidity was taken out, and we're just seeing that momentum higher. We do have more sell side liquidity here that has already been purged. So what I would like to see is the DXY pulling higher and S&P 500 pushing lower into this into this fair value gap, which is also in confluence with this breaker. Very nice. Okay, so that's on the H4. Let's go down to 45. So we've taken out Friday's high today, and we've taken out Asia high. So this is looking like a good opportunity for a short. We're bang on the weekly open. Oh, by the way, guys, I'm looking at S&P 500 CFD. So I'm not looking at the futures E-mini. Just wanted to make that clear. And we've got these relatively equal lows here. It is looking like a really good short. It really is. We might have a trade today, guys. And if I do, ideally, I want to see something like this. So we've got Asia being taken out. I want to see price come down into this area of liquidity, perhaps down towards this sort of discount area from the previous daily range. So we have, this is Friday's range. From this low to this high, I would like to capitalize on a reversion towards this target in this wick. That's what I'll be interested in, something like that. Okay, so I'll be interested in to see something like this. So what I mentioned earlier in terms of going from thinking like an analyst so what I was referring to earlier about thinking like an analyst, being the analyst, I'm slowly transitioning into the trader. Okay, remember what I said about the trader? The trader is both the risk manager and the psychologist. You have to be introspective. You have to be able to hear your own thoughts, feel what you feel in the present moment. You need to know whether you are in flow and understand whether you are emotionally compromised. Now this comes with time, and the best method or the fastest route to achieve this is via a couple of things: is maintaining a good trading journal, which you record both the entries, exits, all the trade, all the screenshots, etc. But you also record your emotions. Okay, you can use your emotions as data, and this is what I do with my clients. So with traders, with the clients that I work with, they have to record their trade as well as their emotions. And so what happens is, after doing this repeatedly, the trader becomes more self-aware, more introspective. And this level of sensitivity and presence, it allows the trader to spot potential mistakes or mental mistakes that will lead to self-sabotage. Okay, so I wanted to just make that clear, that you need to be able to start transitioning from analyst to trader, and the trader needs to be both the risk manager and the psychologist. So I hope you guys are taking note. Yeah, V2, journaling your emotions during trade is highly insightful. 100%. There's what I'm saying is backed by research. Okay, what I'm saying is it's backed by science. So I'm not making the stuff up, guys. Okay, so we're on M15 now. I want to start. I'm still in analyst mode. I'm not yet in trader mode. So I want to start looking at multiple time frames to see. I've recently been taught a couple of new methods of analysis, and so I'm just going to start looking for previous order blocks and start mapping those out, because I want to start looking for potential yeah, I want to start looking for potential order blocks that can be used as projections. So what I'm going to do is I'm going to use this particular one, this particular order block, and we have another one here. So I want to have a look at that one too. Okay, so let's we've got that one, and okay, so let's go up to 45. Nice. Okay. So we got 1, 2, 3. Okay. Interesting. So let's go back down up to, was it a 4 hour? Okay, we got off this 4 hour fair value gap. Come back down to 45. Okay, now I'm starting to see things a little bit more clearly. Price is actually reacting off of this 3.5 standard deviation, and we've got this potential pattern forming. Let's check the time. Okay, we still got a little bit of time, guys. 1, 2. Okay, I'm liking what I'm seeing so far, guys. So at this stage, what I want to start doing is I want to start looking for divergences between the S&P, NASDAQ, and oh, I wasn't sharing my screen. My apologies, guys. Here we go. Right, so I want to start seeing, yeah, I'm favoring the shorts for now. So I want to start seeing an opportunity to the downside, but I also want to start seeing a divergence between price action on the Nasdaq, the Dow, and S&P 500. So those unfamiliar with this method, you can just go ahead and visit ICT's YouTube channel and start researching, studying SMT divergence. So I can see here that there is definitely a divergence. In particular, I'm seeing Nasdaq has made new lows, whereas the S&P and the Dow's hasn't made those lows. As you can see here, let's highlight those. So we got those high highs and those higher lows on both the S&P 500 and the Dow, which these are leading indices, right? Yet here on the Nasdaq, we've got a little bit of divergence. So this tells me that there is potential that we're going to see further upside, because we're seeing a lot more strength in the S&P and the Dow. So what I would like to see is I want to see some sort of confirmation. So I want to see some sort of market structure shift on the lower time frames. So if we have a look at the Dow, hold on, get rid of all of that. Okay. Here on the daily, this buy side has already been purged. If we go back to the daily here, again, yeah, very similar. Buy side has been taken out. There's still quite a lot of buy side here, and of course we have this one. Oh wait, this is the S&P. Let's go back. Oh, here we go. Interesting. Okay, on here on the US 30, the Dow, we're within this order block here, but it looks like we're going to be tearing through that, and perhaps we're going to be targeting this rejection block right here. Okay. Ideally, for shorts to take place, I want to see price go into this rejection block. So although I'm favoriting the shorts, I do want to see a little bit more upside. But that's on the daily time frame. So let's go down to H4. What are we seeing? Price of liquidity taken out. Continuation. Price is coming up to this. Yeah. It just seems to be quite a lot of strength on the Dow. A couple of things I want to see on the Dow is I want to see some displacement. I want to see a market structure shift. Here on the M5 or on the M3, I want to see price breaking structure here, and then returning for a potential continuation lower. So this is where I'll be interested to see to find shorts. Right now, it's like trying to take a short in front of a moving train, right? So for me, I want to see some sort of displacement. So if we go have a look at, just because of the divergence between these. So over here, I would like to see this low here, guys. We're on the M3 time frame now. I want to see something like this. Okay. Because there's a big risk for price just to continue higher because of the higher time frame, liquidity that we have above. So if we go back to the daily on the S&P 500, still got this buy side liquidity right here. And on the H4, on the Dow, on the H4 on the Dow, we have this this daily rejection block. So there's not a strong signal right now. So in this situation, guys, when there isn't a strong signal, so in this situation, when you're waiting for your signal to come, you're waiting for market structure to shift, and you're waiting for that confirmation, this is important time to just know when to step away, know when it's not clear, there's no signal. You need to just be patient. Now, there's a couple of things you can do during this stage. So what you don't want to do is force the trades. Number one, you don't want to, just because you've invested, let's say, a few hours just to prepare yourself, you've invested some time to analyze, it doesn't mean that you should be making money, right? You shouldn't be thinking about that. It's not about making money, right? It's about the process. It's about, are you following your rules? Okay. And if there is no trade, but you have that urge to trade, it's quite simple. You journal what you've done in real time. You look for the lessons and insights, and then you can do a couple of things. You can do a back test, okay? And in that back test, you'll be able to switch from being the analyst to the trader. And during that simulated environment, this is where you get to practice your setup. And this act of practice is something that you got to be doing on a consistent basis every week. Constant practice, constant repetition, right? Get the reps in. Just like if you want to build muscle, you have to exercise X amount of times every week. You know, if you want bigger chest, you want bigger shoulders, etc., you got to be doing chest 2-3 times a week, right? And then you got to vary the different types of exercises. Same thing with trading. If you want to increase your accuracy, precision, your discipline, then during your back test, you need to have your trading plan laid out, and you need to follow it. The same exact process you will do in real time, you do that during your back test. Okay. It's important to use these practice sessions to improve the process. So there's a good question here from Tetrick. So I'm just conscious of the time, guys. I've got another 10 minutes. So this will be a good time to send your questions in because there isn't any clear setups. I was looking for shorts, but I'm not seeing any shorts. If we go down to 5 minute, we're seeing price actually push up. Let's have a look at the DXY. DXY is continuing to push up. The Dow price is price is pushing up. So again, because I'm waiting for market structure shift, this one right here, I'll set my alerts right here and just wait patiently. I'm also going to set my alerts here and around consequent encroachment of this higher time frame PDRA, and let's have a look. Let's see. So, okay, so the science of recording emotions. So the science of recording emotions. Okay. The science behind it is the best thing to do is go on to Google, right? Because it's a bit out of scope for this particular session to start going into the research, the science. But there's thousands of studies when it comes to emotions, right? Thousands of studies, and there are different methods to studying emotion, and that is basically tracking the emotions, right? If you're able to track the emotions and relate it to a particular scenario and what your response was, then you're able to identify and link particular emotions with particular triggers. So I'll give you an example. A lot of traders, they get triggered when they experience 2 or 3 losses in a row. Yeah. That trigger, the trigger itself is the 2 or 3 losses. The emotional response is frustration, anger. So, these are typical responses. And when you experience that anger and frustration, it then leads to a certain behavior. Okay. That behavior typically is revenge trading. You start to chase and force the trade, over trading, and you end up giving even more of your capital back. And so the way to track this is to have a journal, to have different tags. So for every trade that you have, you create tags for them. And then you start doing, you have 10, 20, 30, 50, 100 trades, and all have specific tags. And what you can do then is, once you've had those tags, you can start filtering out, create filters, and you can start seeing what the averages are. You can start seeing what kind of trades are you experiencing more FOMO, what kind of trades are you experiencing frustration, anxiety, etc. And start looking for patterns. Yeah. So in answer to your question, Tetrick, have a look at, go on Google and start and research on emotions, decision making, high performance. Plenty of information out there. Okay. Question here: what monitor am I using? I believe this is the G9, Samsung G9. It's the 49 ultra wide. So I opted for this screen because I'm able to look at multiple screens with just one screen, and I wanted less clutter on my desk, more real estate, if that makes sense. Okay, so I'm gonna wrap things up in a few minutes, guys. Any final questions? Let me go ahead and check Instagram to see if there's any questions from you guys. No, looks like we're good. So unfortunately, no trade today. As direction continues to go bullish on indices. Okay. And this is why we wait for confirmation, not rush into it. Okay. All right, just checking if there's any more final questions. No final questions. So, okay, no worries. All right, guys. So before we wrap things up, make sure that you are smashing that like button, subscribing. And if you want more information about the style of trading that we do here at Bank Level Trading, then use the link in the description below. You'll be able to find out more information. And if you guys are struggling with your psychology and mindset, then make sure that you reach out to me, and we'll be able to discuss how coaching and mentorship can help you and accelerate your development, so and help you become a 6-7 figure funded trader. Reach out to me, and I'll be happy to discuss that with you. You can find me on Twitter, Trader Coach, without the E, Trader Coach. And you can find him on Instagram, rodrigo.antonio. Oh no, rodrigoanton.io. So just click on Rodrigo Trader. You should be able to find me, guys. And we can discuss your performance and how and give you some guidance on what it's going to take for you to take it to the next level. Okay. So really appreciate everybody. Thanks very much. Shout out to the Trading Nut community, and shout out to CTI, and shout out to the Trader Roundup. Oh, by the way, guys, I did attend a space yesterday hosted by Trader Roundup. That space, I was speaking on that space where ICT Concepts was on there. Riz from Words of Wisdom was on there. Omar was on there, and Paladin as well was on there. So make sure you go ahead and check out Twitter to listen to that, because it was just packed full of gems. So yeah, make sure you give that one a listen. I've posted it and shared it on my Twitter anyway, so really easy to find me. It's at trader.coach. Trader Coach, sorry, TRADR Coach. You'll be able to find me, guys. On that note, thanks very much. Thanks for tuning in, and we'll see you next week. I'll be joined by none other than than Diego, my cousin, and he is the senior trader at Bank Level Trading. Take care, everyone. Have a good week, and make sure you watch out for that volatility during all that high impact news this week. It's going to be a big week. Good luck, guys.